All right, let's talk about Tesla. The company just dropped two massive announcements, a cheaper car and a way smarter AI. You'd think the stock would absolutely take off, right? Well, the market had other ideas. So let's get into what is really going on here.
And this is what happened. On the day of the news, the stock dropped 4.5%. It's what traders call a sell the news event. And honestly, it left a lot of people just scratching their heads. So, what's the deal? And that really is the million-dollar question we're digging into today. The answer to this gets right to the heart of the huge debate on Wall Street over how to value one of the most polarizing companies on the planet.
Okay, so first things first, let's just lay out the evidence. Let's look at the two big announcements that, on the surface, seem like total slam dunks for Tesla. First up is the new, more affordable Model Y Standard. It's coming in at just under 40 grand, and the whole point is to make it easier for more people to get into a Tesla. But look, this isn't just about moving more metal. The real play here, the big strategy, is to pull more people into Tesla's entire world. You know, the software, the superchargers, and the big one, it's full self-driving AI. That's the key to their whole long-term robotaxi dream. And that is the perfect lead-in to the second major update, full self-driving version 14.1. Tesla is billing this as a huge leap forward, maybe the biggest since version 12. And it's all about making the AI drive, well, more like a person. Yeah, this is the actual marketing term they're using, sentient driving. The idea is to get away from that rigid robotic feel and make it smoother, more intuitive. Now, you still have to pay attention, of course, but it's the feel of the drive that they're really trying to nail down.
So you're seeing things like robotaxi-style parking options, something called sloth mode, which is basically for a super smooth, comfortable ride, and huge upgrades in handling real-world chaos, like junk on the road, emergency vehicles, and those tricky, unprotected turns that we all hate.
So, a cheaper car to get more people in the door and a smarter AI to deliver on the future. Sounds like a home run, right? Well, not so fast. These updates have basically split investors right down the middle, and it's created a massive debate. It really boils down to two completely different ways of looking at the company. In one corner, you've got the bulls, like the folks at Wedbush. They're saying, hey, forget the short-term noise. The AI and the robotaxi network is the real story, and that can make Tesla a multi-trillion-dollar company. But in the other corner, you have the bears at places like JP Morgan, and they're focused on the problems of today, shrinking profits from cheaper cars and some serious questions about whether Tesla can even pull all this off.
And the new Model Y is the perfect example of this whole fight. To the bulls, it's a genius move to onboard more users to the AI platform. To the bears, it's kind of disappointing. It's not that revolutionary, sub-$35,000 car people were hoping for, and it definitely squeezes their profit margins.
And this right here is a really, really big deal for the bears. The hardware dilemma. See, the new FSD software is built for the newest cars with what's called Hardware 4. If you have a slightly older car with Hardware 3, it's not clear if you'll get the best features or if you'll have to pay for a really expensive upgrade. This is a huge risk that could tick off a massive chunk of Tesla's most loyal customers. And that uncertainty is a big reason some people are selling. Okay, so enough talk, let's actually look at the charts, because you can see this entire battle playing out, clear as day, in the stock price itself. So here's the daily chart for Tesla. Now, I know it might look like a bunch of squiggly lines, but there are two lines on here that tell the entire story of this fight between the bulls and the bears. The first one is this blue line. It's the 20-day simple moving average. Just think of it as the stock's short-term mood. Right now, the price is below it, which tells you the mood is pretty negative for the short term. Now, this purple line, this is the one everybody is watching. It's the 200-day simple moving average, and it's a huge deal. It represents the long-term trend, and for the bulls, this is the floor. It's the critical line of support they absolutely need to see hold. So here's the summary of the whole situation. The stock price is trading below that short-term trend line, which explains why things feel so bearish right now. But, and this is important, it's still holding above that long-term floor. So you could say the long-term bull story is bruised, but it isn't broken. At least, not yet. So with all this context, the new products, the big debate, the technical picture, what does it all mean for the stock price? Where is it headed? Let's get to the verdict. Okay, based on the analysis, here's a probabilistic forecast. Now remember, this is not a crystal ball. It's all about outlining the most likely paths for the stock based on a few key events. So let's break it down. In the very near term, say the next 1 to 2 weeks, the bias is pretty bearish.
If the feedback on the new FSD software is just okay, or if that hardware issue gets worse, the stock could easily dip down to test support in that 400 to 420 range. But if you look out a little further, maybe 1 to 3 months, there's a real shot at a bullish recovery. If that new Model Y gets rave reviews and the FSD updates start to get people excited about robotaxis again, the stock could definitely rally back above $450. But, and this is the huge but, the major risk that everyone is watching is a break below that long-term floor, that 200-day moving average. If the stock falls below that line, it could trigger a much deeper sell-off, potentially pulling the price all the way down into the $300. So when you boil it all down, here's the final takeaway. What you're watching right now is a classic battle between a near-term dip, which is driven by very real concerns about profits and execution, versus the massive long-term bet on Tesla's AI and self-driving future. And that leaves us with the ultimate question. The company has painted this incredible picture for the future of transportation, but the road to get there is absolutely filled with risk. The answer to this question, that's probably what's going to decide where Tesla stock goes from here.